how to reduce taxes as a W-2 employee. So I have the exact formula, the exact strategy. You're going to stay to the end because I'm going to give you a massive gift that you have to take advantage of, because those of you that are employees, you're way overpaying taxes and you don't even know that that's not even a cool thing to do. So let's talk about three things. What is the tax structure between employees and business owners? And it is vast, and you're going to be shocked. You're going to have to be both if you really are serious. Number two, what are the standard deductions available to employees? It's just you and Social Security number. Not a lot. The answer already. I'm coming back to that because that's a really big deal. And then number three, the misconceptions of just staying an employee, not becoming an entrepreneur, or some combination of what I call living corporate life. So if you are an employee or an entrepreneur, it is vastly different. And Kiyosaki said it the cleanest. As an employee, you make money, taxes come straight out of your paycheck, and you get to live on what's left. Now you could choose that and think that's a cool life, or you can have a company. I don't care if it's a side hustle. I'm going to teach you to make it a hustle so you're really making money. Now you live in companies. Companies make the money, not you as an individual. Your EIN, tax identification number for the company, makes the money. Then you get 81,000 pages of deductions in the United States. Then you pay tax afterwards. So which tax structure do you want? I prefer obviously only living corporate life, being an entrepreneur. But a lot of you, you're going to live both, and it is the number one way to do it. Number two is how you're investing. Like when you invest, you get huge depreciation schedules. So as an employee, you can invest in gas and oil, which is the number one. You could do aviation. Obviously, real estate gives a depreciation schedule, mineral rights, water rights. There's different strategies in investing that a lot of people don't pay attention to. And a lot of your CPAs aren't paying attention, saying if you invested differently, you'd have a better tax structure and you'd have a better tax return. So it's not just about how you're getting paid. It's also the investments that you're making. And a lot of people don't talk about those distinctions. So living corporate life means living inside the company. So if you sent, for example, Loral Langemeier money, I'm going to send it back to you, because I don't want it. I have no reason to take it. I want it to be paid to a company. So the company makes money because it has a legal reason to do it. So whether it's real estate, whether it's this education, you want to buy a book, you're paying a company to get the book from it. So if you go to Make Your Kids Millionaires, that company makes the money. And then because the company's making money, it gets the deductions. It gets the cost of goods of the book. It gets the depreciation schedules of real estate. So as a company, living corporate life gives you 81,000 pages of tax code. So what does that mean to you as an employee? Well, you've got to offset that big income. And for a lot of you, as we get into some strategy, why have a big income on a W-2 when it's the worst kind of money? There's qualities of money. The highest quality of money is money that goes into your entrepreneurial ventures. So those are LLCs, S Corps, C Corps, limited partnerships, trusts. So when your money's made in those structures, you get to activate the tax code. If the money's coming to you, your Social Security number, and this includes that sole proprietor, you don't get to do much because you legally have no reason as an employee to deduct your phone, to deduct your car, to deduct a wardrobe, to deduct much of anything, quite frankly, just because you're an employee. So why wouldn't you live both lives starting at 18? It is not about the amount of money you make. It's not about income. It's about intention. Do you want to live corporate life and pay less taxes? It's not difficult. It's just different. And I have the best teams in the world that will help support you to learn how to do this. So only our big table clients get a 3-year tax return review. We go back through and then we help you restructure how money's made, which then determines how you're taxed. It's a really big deal. The standard deductions, again, to an employee are a few, right? You're probably going to get your house if you actually own your house in your name. You're going to get some kids. You might get a spouse. I mean, not a lot. That's why it's a 1040 EZ, because it's easy and there's not a lot of deductions you're going to get. So again, you can claim medical. Actually, I'm going to read a few of the deductions that you can, because I don't live employee life much. So the itemized deductions: medical, dental, state, local taxes, mortgage insurance, charitable contributions. You can do those, 401ks, IRA, child tax credits. A lot of employees don't do is they don't gift to their children. You can gift every year to your children, which can another be a tax deduction. It does go against their estate earnings upon your death. That's all part of the gifting tax structure. So if your CPA doesn't know how to do it, and these simpleton little what I call tax box stores that just pop up during tax season help you with your 1040 EZs, they aren't going to be very strategic. They will operate off of a software. They check little boxes. They're not using 81,000 pages of code. So we're talking about a human who actually consumes the tax code. Real tax strategists that know 81,000 pages of deductions against those companies and that company income. So before I continue and tell you some massive massive mistakes that I see made all the time and give you a massive gift. I want you to subscribe to this channel. I want you here 5 days a week, family-friendly channel. I want you and your 5 and up in your household watching and listening. I want you to grab our journal. It's a brand new journal, and start taking notes. What are you learning? What are you doing? Plus, it's a great opportunity around the kitchen table during dinner to say, what'd you learn from Loral's video today? What'd you learn, right? It's Loral Langemeier, the Millionaire Maker. Just share with a lot of people. What are you learning and what are you going to do? Let's start building a new action plan around what you want to do with your money and how you want to become at least a 100,000-aire if you're not going to become a millionaire. Now, back to mistakes. Mistakes that are huge is staying a sole proprietor. I see it all the time. People who do business as sole proprietor. The biggest mistake no one's telling you is while you're working as I see like hair salons, nails, a lot of service providers, massage, they're all sole proprietors. There's a risk anytime you're dealing with a human, so you have no liability protection. They can blow right through it to actually take your home, take any assets that you have, cash, savings, versus put any money that you make from 18 forward into an entity. The entity then protects you, and only if any litigation happens, they can sue with the assets or the liability. So you're only going to sue into the entity. So you want to protect yourself, but there's bigger repercussions of this. The financial services world don't even see you as a real business because you aren't incorporated. So it just sees you as what you are, just an individual trying to make some extra money. They don't see you as a company with corporate credit. So companies can get credit. Companies provide asset protection. Companies provide all the legal deductions. So when you stay small and you wonder why you're not growing, it's because you're a sole proprietor. Get out of that status immediately. In fact, I'm such a fan, as you know, I say when you're 18 years old, get your first LLC or entity that's appropriate for what you're doing. I'm going to give you a link to a strategy session. Please talk to our team about how we can coach and mentor and guide you through this. Our tax teams and our corporate structure teams only come with the big table. They do not come with the income programs. We're just helping you market and sell and make some money. Once you have that, let's set these structures up and make sure that you never blow another tax year. The big gift I want to give you, if you've not gone, is the Millionaire Intensive. It is a 1 day, 10 o'clock to 6 o'clock Pacific. We do it every 3 weeks. And yes, I teach it live because it is critical. And there are economic changes, political changes, things that are going on in your world all the time. So I want you at the Millionaire Intensive. You're going to learn about corporate life. You can have a strategy session. In fact, I encourage you to have 2, one before and one after, or even like farther after. Make a decision on the problems that you think you have. Our teams are going to dissect and say, these are all the gaps we see and the problems you have. This is the way we can help solve and create the solution. So have a strategy session, show up to the Millionaire Intensive, stay to the end. We do a marketplace and you can make money, sell whatever you're going to sell because you need to become a business and the money needs to go in your business account. So if you have any questions, go to askloral.com, ASKLORAL. Ask questions, make a request, and we'll be back tomorrow.